Boom! Florida. We have crude at 119.56, natural gas at 8505, and gold at 1852. Kill it.
All right. Welcome to the True Trading Group live stream. No, I'm not Michael Edward. I'm much better looking and older. I'm Jason Spatafora, better known to you as the Wolf of Weed Street. And today for Power Hour, I'm joined by none other than the Professor Jason Simmons. And for those of you that don't know about True Trading Group, it is the fastest growing and highest rated premium education platform with nearly 9,500 family members strong. TTG combines professional university level education with today's top financial tools, packaged together for one low price for the entire year. Let me be clear, TTG offers all the courses and tools from companies like Benzinga, TradingView, Aetna, Polygon, CBOE, Quote Media, and more, just for $3.08 per day, with absolutely no upsells for courses or tools ever. And the price you pay when you sign up is the price you pay for life. TTG exists to empower the retail trader. My partners, Mike and Adam, thought of it and incorporated TTG in 2014, and we went live with the investing public at the end of 2016. Beginning of 2017 to date, we have over 1,630 reviews on Trustpilot. We are 5-star rated and spend most of our waking lives dedicated to the business of TTG and the business of you. You are the retail trader and investor looking to learn, trade, and profit. Everything we do is centered around that concept to help you learn, trade, and profit. Mike will be joining us a little bit later, but for now, you have myself and the professor. So let's begin. We're going to take some questions. I know it's been a wild week, and let's get started. All right. Let's see what we got. Okay. All right. Here, UVXY calls. You know, UVXY calls are they're a little tricky at times. You know, I tend to think that it's better to own the stock and trade the stock. But yeah, of course, you know, with the UVXY calls, you do get that leverage. Now, the thing that I would caution against is, you know, having those time frames, those expiration dates too soon. You know, like in this market, and this is something that, you know, we've been hammering home with the TTG members. You definitely need some time to adjust for, you know, every single day, because if you had, you know, puts yesterday from like Wednesday to Thursday, you got destroyed. If you got calls, you know, it from one day to the next, it's really, really sticky. So, you know, always allow yourself some time and tear into those positions.
Also remember, guys, that VIXI is not an inverse of the SPY. You have to watch, like both of them can be green and red at the same time. Now, if the SPY starts to fall, then we most of the time see the VIX, it starts to help our trade in the VIX, but you can't just be watching the SPY and jump into VIXI. That's dangerous.
Exactly. Next question.
Did you guys to watch it next week? It's up here at high of the day, showing relative strength, resistance up at 15. They're going to be at a conference on the 6th and 7th.
Simmons, you're getting paid a compliment if you look at the screen. I know you're glued to What's going on?
Oh, sorry. Thanks to the professor's lessons, I've made money 9 straight days trading the same ticker. Boom! Really, really good work, guys. One thing that we teach here and STR guys, before you master the whole entire market, do you know that most traders only trade a couple stocks their whole entire career? Like X. How many months did you trade X for? You
I
write it until the wheels
traded
fall
it.
off.
I traded it from. It was my first alert in TTG at $4.80 to buy the stock, and then we traded the calls till January of this year from $5 to 38, essentially. And that's one of those things where U.S. Steel was a good option for a lot of the members to learn on, and then you fast forward. A lot of people built their accounts on U.S. Steel, and it was, all based off of an idea around infrastructure and just some historical uses, when the economy is suffering. But the consistency with that ticker, you don't ever have to leave it. So, if you're having 9 straight days trading the same ticker, just keep at it. If you know something inside and out, that's the perfect scenario. All too often when you try and deviate and try and trade something that you've never looked at, you don't understand, you're in for a lot of surprises, which is, a big reason that newer traders struggle in this market.
Facts. I'm really proud. Really, really proud of you guys. And that's just amazing. That's what we want to see. The SPY guys, Apple, 2 of them that are really, kind of correlated together because Apple is the SPY's largest holding. So guys, learning these 2 would be 2 to really start in on. Apple was a little bit slower than the SPY. So
I thought you were going to say that that Apple finally cracked that 145 area.
No, it can't. It won't break it. It really will not break it. We talk about this in chat all day, the 145 mark. And I'm like, guys, yesterday was 150. Today it's just 145. If the SPY is going to break down, we need to see. That's what I'm looking here for the end of the day. If we can still early 309, but if Apple finally gives up this 145, then we could push down the day towards that 407. So that's something that we are watching here.
Yeah, the last 15 minutes is going to be really interesting, as we go into the weekend. There's just, there's a lot of stuff that hasn't just gone on this week, but as well for next week. You have Amazon doing their split. That's going to be really interesting to see if it follows the pattern of forward splits like Tesla, Apple, NVIDIA.
I think it's going to be a different market environment. We have Fed, we have a whole bunch of stuff that we didn't have coming up when we had those. We were in a really bullish market, tech-friendly market when we had those splits happen. So I think it's going to be very interesting, but I don't think we're going to get that straight bounce like we saw with those others.
All right, here's a question, and I like it. What do you think of long-dated 6 to 8 weeks out of the money SPY put strategy for the summer? I love this strategy. When the SPY was at 460, I was banging the table, and this is, we're talking about middle of March, when we made that run up at the end of the quarter. Like after that FOMC meeting, we touched 460, and I'd been banging the table for 460 June 30th puts, and they were expensive, $17 to $18. Now, one of the things that actually one of the TTG members pointed out yesterday was the IV on a bunch of these was really low, and we were looking at the 408 and the 407 puts for July 15th. I really like that strategy. I still think that you have to tier in into that position. I wouldn't get too crazy with
Explain
like,
that a little bit towards people who are new that don't understand about tiering in.
okay, so let's say you have a budget that you want to spend, all right, and you say to yourself, you look at the price, and let's just say, for argument's sake, like the July the July 15th 408 puts are currently $12. Okay, so per contract, that's $1,200. And let's say you're like, I want to buy 10 of them. All right, I'm going to throw 12 grand at this. Don't do it all at once, right? Go, start small, tiering in. You buy 3, maybe you take a little bit of profit, get a little bit of insurance, wait for the right setup, and maybe you add. Always assume, especially in this market, that you're gonna get a better price. From one day to the next, that's what's happening. So you have, yesterday, if you look after hours, we were over 418. And then this morning we open up at 414. The market's crazy. You can't be too overly bullish or too overly bearish. You have to be very nimble. And by tiering in, it allows you to keep up with that pattern. So yeah, I like a 6 to 8 week strategy on puts. Especially because we still have a lot of things that need to work themselves out. The tightening by the Fed, which was actually supposed to start on Tuesday, it hasn't really started. So they're saying July 15th because they have some treasuries that are maturing. You're talking about, for those of you who don't understand, you'll hear terms like QT or balance sheet runoff. All of that money that the Fed was pumping into the market by buying treasuries and mortgage-backed securities, they have to unwind that. And they have to unwind about $7.6 trillion, which equates to $2.1 billion a day. Now, for the first 3 months, they're doing $47.5 billion. After 3 months, they're doubling that to $95 billion. So it's definitely going to cause liquidity in the market should drop. And when you see a big move like the one that we've had in the last 2 weeks on the SPY, you also have to factor in like the volume has been anemic. Simmons, maybe you can talk about that. I think yesterday was the lowest volume day on the SPY since December.
I mean, look at today. Look at today's volume. Today's volume is 53.3 million. So you guys see I draw a little volume bar across here. So let's go back in time. Look, back. Still, no. We're talking about December. This is the last time we had, during this time, this is the last time we had this low volume. That is insane. Look at this. It's nothing. We've held this channel, but now this is where we get into trouble because we know we have the Fed meeting coming up. Inflation keeps on getting higher. The economy is not slowing down, which what needs to happen. And this 50-day, as it curls, it's just going to keep on pushing it up until it's over and smacks it down. So. Yeah. I wouldn't be, that's what it's starting to pull back here a little bit. Like, I wouldn't be surprised if we close down here at 407.
Yeah, I definitely wouldn't be. So, I like the 408s, which were suggested by Dahlia, TTG lifetime member, those were at $9.50 yesterday, right? They're up 30% today. I was looking at the 400 July 15th, but really was just kind of like, what, let me see what happens at the end of the day, because that last 15 minutes can be wild. But it's definitely an idea that, you have to flesh out these ideas, ahead of time, right? It is something that we teach you, and this is something that we go over in the workshops and in the lifetime lounges and in STR, which is sniper trading robots, and the study sessions. The work that you put in for the most part, is going to be done after hours, and fleshing out these ideas with a group of people that have different skill sets. Or, maybe somebody's a better technician, maybe somebody's a better long-term analyst, and then coming to that happy median somewhere in between. Okay, next question. I'm having trouble managing my risk with options. When I set my stop loss at support resistance area on the chart, my loss can be too high because of the volatility. How do you set up a stop loss with options? Truth be told, I do mental stops, right? And if you're getting into a situation where you're getting really hurt, usually that means a couple of things. One, either your size is too big, or two, you're fighting the trend, right? And maybe you're also playing something that, especially if you're new to options, is just a little too volatile. Like for new traders, everybody wants to go to the SPY, Tesla, and all these. And yeah, you could make a ton of money day to day. In this market, you're basically flipping a coin. As far as options, like I like the lower volatility stuff, but also going back to what we were talking about before, this is exactly why you need to tier into a position. And don't just think that because, hey, there's a support here, that the stock is just going to bounce off of it, or if there's a resistance, it's just going to drop off of it. In this market, the supports and resistance, and Simmons can tell you, they're a guideline. They aren't set in stone. So, managing your size in this market, and this is something that I've had to deal with in the last couple of weeks, because from hour to hour, like I was wrong, I was right, but my sizing was just a little too big. And yesterday was a prime example. I got into we got into $43 ARC puts. Okay, the initial entry, and it was a tier 1 position, was at $2.53, and then the first take profit was at $2.76, giving us a little bit of insurance. And I took half of the position off the table. And then ARC just exploded like the rest of the market. I don't think anybody was really prepared for it. But I was able to stay in that position and add lower. And the only way that I'm able to do that is because I managed my size and I took that initial profit. Then we wake up today with this gap down, and those options are cleaning up. And they were a June 24th expiration date. And I think the low of the day yesterday was $1.90. I think the high of the day today is somewhere over $3.
I also think this goes around to what that first person talked about as well, is watching how the option moves. And you can see after watching it for a while how it reacts at certain levels and how it moves.
Yeah, for sure. Look, for options right now, I would focus on a couple of things that move with the SPY, right? And have low volatility. And I'm talking something like a Palantir, a Space, where they're cheap stocks, so you can get a ton of time on them. You can get like 2-3 months on them. And if you're wrong one day, you're not going to get absolutely destroyed. If you're buying SPY options or Tesla option and you're wrong, and you're holding overnight, you're going to be really wrong. And especially for people that are trying to, build up their accounts, and actually, learn, trade, and profit. You're not learning much by just kind of gambling on where I think it's going to be tomorrow. So you really, have to be very careful with these things.
So someone's asked, with oil knocking on the door, why are we not seeing oil stocks moving as high as well? Well, oil stocks like to move when they get through certain areas, right? We talked about the 115 area was first, 118. Now we're at the next area is 120. If we can, we're at 120 right now. So when you're trading something, and do you know how sometimes, guys, we're watching stocks and they separate from crypto or they separate from whatever. If you want to trade the crude move, you have to make sure you're following something that's actually following crude oil, like USO here is following it today. WTI is another one that's following it today. VTNR is another one that's following it today. So going through and understanding when these stocks move, because these stocks are at different prices, move at different oil levels. So when you wake up in the day, you want to trade the crude move off an oil stock, just like trading gold and Barrett gold. You want to make sure that they're correlating with each other, that you're following it, just like crypto or a crypto stock. Oh, the killer himself has snuck back into the room. But guys, we're coming up to an area now. Remember we talked about last week is we're holding above 110, 115. We're closing the week right now at 120. We talked about this earlier. China opening up, we're going to see a push from that. And are people really going to trust what OPEC says? And are they going to cut back supplies fast enough to really, ramp up production fast enough to really step in time? So I think that's a lot to do with what's going on.
Yeah, and also especially for the stocks, they're not impervious to what's going on in the overall market. Like as somebody that's been trading energy for the past couple of months, there is going to be some tug when the overall market is getting crushed. Now, if oil's ripping and the market's ripping, you're going to see moves on these things as well. So just keep that in mind.
What's up, guys?
Welcome back.
What's up, everybody? My TT fam, YouTube viewers, how you guys doing? We're here with you guys for the final hour of the trading session here on Friday.
So only one stock that you're missing, VERU, is still up in your eyes with that conference coming up.
What, VERU?
Yeah, and I'm watching XLY. So XLY, everybody, is consumer discretionary, and so Amazon has their forward split on Monday, and like the contracts for Amazon are insane. And I was looking at XLY for a proxy trade because that's the biggest holding that they have is Amazon and Tesla. It's something I'm still looking at. We'll see what happens. I'm not going to chase it here, but I like my take, and I don't have any open like Amazon puts or anything like that, is that Amazon follows suit from other forward splits. You also have a lot of people that think that they're going to get 20-1, but the cutoff date was May 27th. So just kind of wanted to put that out there.
Yeah, I got just getting myself kind of back into the groove here. Just kind of taking a look at some of the things that we've got going on here in the markets. The SPY, it ended up pulling back down, sitting back down here near lows. So just a kind of an update for some people. I was in put options here all day. And then I had to step away from my desk to take care of something during the day. And I just, set a stop for myself on the remaining piece of my put options on the SPY. And then that little midday bounce, that triggered my stop while I was driving in the car. So for those that are asking if I'm still in the put trade, I am not. I'm completely out of that position. Although if I was still at my desk and I didn't have that stop actually hard in there to trigger, I'd probably still be in the trade. And the way that the market is sitting right now, for anyone that followed me on the put options from earlier this morning, I would still be holding them. We had already taken profit off on the trade 3 times. So really in the driver's seat on that position. And I would say that the lack of a bounce today in the market, rather than us close down here at 410, 409, I actually think the markets might make a new low of the day right before the close and go down there and close around 409. And if that's the case, and if you get that, depending on what your expiration is on the options, I'd be sitting on that. And I might even carry it over the weekend. If you've got expiration like June 17th, I think you can carry it. If you're looking at June 10th or June 8th, or even June 6th, which is even crazier, I wouldn't hold those. The time decay would be too great if you're on a June 6th or a June 8th expiration. June 10th, maybe, but understand you're taking pretty big risk carrying that over the weekend in case you get a gap up plus the time decay. I'd feel much safer holding that position if you had a June 16th expiration. So for those that are following along with the SPY puts, congrats. Those that made some money on that trade with us today. That's kind of, that was where I made my money today, was on the SPY puts. It was a pretty decent trade. And if you guys are still in it, that's what I would be looking for. Okay. But my trigger my stop did get triggered in the middle of the day there when I was driving. So I am out, for those that are still wondering.
And upset about it. It's okay.
Very, very upset about it because, I had to deal with a bunch of stuff today, and I would still be in this trade if I was still at my desk. So I am a little frustrated about it.
I mean, but that's this market, right? Like, how many times have we gotten out of trades only to see them the next day not just pan out, but like crush? Like you still have, and that's the thing. You still have to manage risk in this market. And more often than not, it'll save you. Look, all of us are going to go through like, oh, I sold those calls. I sold those puts. I took a loss on it. And then you see them just absolutely rip the next day or at the end of the day. But more often than not, like, when you stick to your game plan, it saves you. And capital preservation right now is really the most important thing.
Yeah. Yeah. I can't be too, I made some decent money on the trade. But if I was still in the position, I would still be holding on to probably about 20 to 25% of my position is what I would probably be looking for those that are, for those that are still in, that are looking for kind of some guidance there. But 407 to 405, that's your level that you guys really need to be focused on. Okay. It's at 407 level. We're still above it. We're well above it. We're 410, we're 411. So you're still well above that support level. If that level cracks, and this level right here that I have drawn, I'll draw it out for you guys. If this level cracks here, okay, this double bottom, if you get underneath that level, that's when I think the markets can really start to then deteriorate and start to move themselves lower. Okay, so that's kind of what I would be looking for there. Okay, and that's going to be something that I'm going to be paying attention to next week as well. And I do believe that it breaks next week. I do believe that it breaks next week. So that's going to be, I got a feeling that we're going to come on, next week, and we'll be doing a bunch of live streams every single day like we always do. I got a feeling we're going to be coming on and we're going to be telling you guys about how we made money in put options next week. So that's kind of my thoughts. I do not believe that you're just going to see the SPY climb higher from here and we're going to go back to 450. I do think that 407, that 406 support level breaks, and I believe you see the SPY back under 400 probably sometime next week.
Yeah, I'm with you.
What else, guys? What else? What's going on with VERU, Jason? Kind of give me an update with VERU. You said they got
So it's showing relative strength here all day long. If you pull up the daily chart, look how sexy this daily chart looks.
Yeah, it looks really good. I was just looking at it on the daily chart. It did a nice
So
job.
next week, this news came out before, and you can see that people buying the rumor, selling the news. But they're going to be at the Jefferies conference at June 8th. And then they're also going to be at the American Society of Clinical Oncology from June 3rd to 7th. So that's two possible catalysts coming up next week, two conferences that are going to be at.
Both in the same week, two conferences in the same week.
Yep. So I look how it showed strength all day long. Before you left, I texted like, this thing just won't die.
No, look at the 15-minute trade line. The 15-minute trade. Look at this. You guys want to talk about a support indicator on an intraday? Look at this. This is nuts. This thing never once got beneath the 15-minute trade line the whole day. The whole day, you've not seen this thing below the 15-minute trade line. That's impressive. And I mean, listen, I can. You got a short percentage on this thing, Jay? I would assume this thing is shorted over the last 2 months.
And 20%.
Yeah, there you go. Yeah, I knew it. I was gonna say, over the last 2 months, between April and May, this thing was probably really heavily shorted. If they come out with something during those conferences that is something of significance and is something that could be a fundamental catalyst, that could trigger that short squeeze. If this thing gets through that 17 area, it's got room into the low to mid 20s. You can see this thing 22, 24. It's got that kind of potential if it squeezes through that 1750 area, which are your highs from April. So you get through that, there really isn't a lot of structure in your way. Maybe, it's like 17, 18, I would probably say. And I'm looking at the daily chart too. 17, 18. You get through that, I can't see why the stock doesn't push well over 20. 22, 23, I think is going to be very realistic for this stock. That's what I'd be looking for, guys, in VERU. Not something that I traded today, but we'll certainly be on the watch list for tomorrow. I mean, for next week.
Yeah.
And we have oil closing above 120, which is not going to be good for the market as well.
Do you anticipate a big shock to the downside once the market feels the first of real quant tightening? I think that's going to be a shock to some people, especially new traders that have never gone through a cycle of tightening. Look, $7.6 trillion is a lot of money to unwind. They're going to be doing this to 2024, most likely. And to kind of put that in perspective, the last time that we had one of these, the market traded within a range, or the S&P 500 traded in a range of like 5 to 13%, and it only made that 13% in like the end, like the end of the month when everybody was kind of like, hey, QE might start back up again. But look, it's also just going to be shocks to the market. We're going through stagflation right now, right? High inflation, low GDP, right? And lots of demand. So it's not a really good scenario. I think, people are too, that have never been through some of these crashes. And, Mike can speak to that because Mike was, at a hedge fund during the last crash, and he did really well. But I mean, Mike, remember what was it? It was 2007 Lehman crashed, and talk about some of those rallies. They were giant.
They're huge. The biggest, and if you go back in history, the biggest one-day moves in market history, they've all occurred during bear markets. When you have a steady raging bull market, you don't get 3% moves higher in a day. You get 0.7, 0.5, 1%. 0.7, 0.5, 1%. And it's just like every single day, it's just steady Eddie, very low volatility, a slow stair step higher. When, crap hits the fan and the markets start to go down, markets go down a lot faster than they go up. So there's a saying that, bulls take the stairs and bears take the escalator. I say bulls take the stairs, bears take the window. Because stocks go down a hell of a lot faster than they go up. You can have, a stock market crash in 2 months can wipe out 2 years of upside. You saw that during the 2020 crash with COVID. You wiped out, a couple of years of upside. You wiped it out in a month and a half. So that's how fast markets can decline. But when markets decline that quickly, you have to think of it as a rubber band. And like if you all took a rubber band and you just pulled all the way down, eventually it's going to snap back and that rubber band's going to come shooting back higher. That's how the markets react during bear markets. And bear market rallies are so vicious because you get these moments where the selling pressure stops, the selling pressure tires, stocks start to float higher, and everybody feels like they missed the bottom. You get a lot of FOMO in bear markets, and it sounds silly that people don't have FOMO during bull markets. They have FOMO during bear markets. It's crazy when you think of it that way because everybody is so scared that they're going to miss the bottom that as soon as the market bounces in a bear market, that bounce will really, really, really push because it sucks a lot of bulls, and it's called the bull trap. And all of a sudden, the rug gets pulled out from underneath you. It's the exact same thing that happened in the SPY this year. It happened twice. Right? It happened the first. I'll go to a bigger chart just so you all can see it. It happened after the very first pullback, right? The very first significant pullback. Look at the size of that move higher. Look at those 4 days. That's a huge move in just 4 days. Huge. Then you had that ridiculous rally in March. And then you had the rally that we've just experienced. Like these are very, very, very large moves. And it's because everybody starts to feel like, oh, I missed the bottom. Everybody pours in. And then the rug gets pulled out from underneath them. And that's why you get these bear market rallies.
Yeah, I see somebody in the comments. I want to address it. Will S. Yeah, but the Fed can pause the tightening. I think that would scare the hell out of institutions and real money managers because, look, everybody wants the Band-Aid to be ripped off. Retail traders are, they're week to week, month to month. When you're talking about institutional capital, they look in terms of years. And if the Fed decides like, hey, let's pause, I think that's actually more bearish for the overall market because you're going to have to deal with it at some point. And, with the Fed that, the whole it's transitory Fed, they've been so wrong so many times.
Yeah.
How do we really trust them? And like, they've got the best interests of, of the not just, really, look, they've got a mandate and it's not to the market. It's to interest rates and unemployment and, and injecting liquidity into capital markets. So yeah, I think a pause would be just, that's a flashing warning sign that the Fed's lost control and they've given up. And, we could be in some real trouble.
Yeah, I think this is a really good point that Tejas Ted is bringing up. I'm sorry, whoever you said was asking a question. I thought it was Tejas Ted, I saw their name on the screen, but whoever it was that asked it. I think it really depends on when and why they pause. The hope from people that are bullish is that by September, the Fed will have given you another 2 more 50 basis point hikes. We're getting one in a week. And then you're going to get another one after that in July. And then the thought is that they will have done enough quantitative tightening. They will have done enough. Interest rates will have moved higher enough. You're getting a slowdown in the economy that it's enough that can start to cause inflation to come down. That's the hope. And the hope is that if the Fed starts to see inflation is coming down, the hope is that the Fed will pause. Now, I don't think that's a good idea. If the Fed wants to go back to a quarter basis point, maybe, then okay. Maybe they stop doing the 50. Maybe they go down to a quarter, 25 basis points. I think that is something that they can possibly do. But to pause, I don't. First of all, I don't know where this came from. I don't know because the Fed has not said anything about, oh yeah, we're going to pause in September. The Fed hasn't said that. The Fed hasn't said that. Okay. The Fed has not done that. So I don't think you're going to get it, but that's the hope. People are hoping that that's what happens. And I just feel that if they pause, or if they do drop down to like 25 basis points, I don't know if the market's going to hate it. I think that the markets would like it if inflation comes down. If inflation comes down and that's why they're pausing, then okay. But I think they got to keep going. And I'll give you guys my whole like 12 to 18 month outlook on how I think this whole entire scenario plays out. I think this whole entire scenario plays out. The Fed raises rates aggressively. Inflation does not come down as much as they would like it to. And the reason why it's not going to come down as much as they would like it to is because you're still going to have other areas of inflation that are going to remain elevated, like food prices, energy prices. These are things the Fed cannot control. These things are going to stay elevated. So overall inflation will remain sticky. The Fed raises a little too far. Then eventually Russia-Ukraine war comes to an end. That alleviates some of the pressure on food and energy prices. Then inflation starts to come down. The Fed realizes we've pushed a little too far. The economy goes into a mild recession, very short, shallow recession, and then the Fed will cut rates to then bring the economy out of that very short, shallow recession. And then inflation probably settles somewhere in the threes. And then the Fed will go back to maybe a quarter basis point to get inflation back down to 2.5. And you'll be stuck with like a 3% Fed funds rate. So I think the Fed goes all the way up to like anywhere from like 3% to like 3.4%, realize they went too far, bring it back down to like 2.5, and then raise back up to 3, and then we're done. So I think that's kind of how this thing is going to play itself out. But there's a lot of factors that can change that outcome. Like if the Russia-Ukraine war never ends, that changes. The Russia-Ukraine war ends tomorrow, that changes things. If China invades Taiwan, that changes things. Right? There's a lot of, if China goes back into a COVID lockdown, that changes things. All of these things are factors that will determine, if the Fed is going to continue, if they're going to stop, if they're going to pause, if they're going to go down to 25 basis points, if there's going to be a recession, if there's not. These are all very fluid things. And a lot of people, and I used the example, I used it the other night, like a lot of people are under the impression that this is like one of those games with like the jelly beans in a jar. It's not. It's not like, hey, guess how many jelly beans are in this jar? There's an answer. And we can all write it down on a piece of paper, and then we can open the jar, count it, and see who's right. This is not that. There are so many pieces of the economic wheel that are at play here that could affect the outcome, which is why moments like this is when education really, really, really comes into play, because you have to understand what those catalysts are on the bigger scale. That's going to determine what the Fed's going to do, what inflation's going to do, and therefore what the stock market's going to do. And if you don't understand what any of those things are or how they are affected, you're going to have a tough time judging, okay, are the market's going to go lower? Are the market's going to go higher? When does the environment change? Like, you can be bearish right now. I still think the markets move lower, but something could happen literally tomorrow that could change that. And you have to be able to understand it, analyze the information as it comes out, and adjust your game plan as you go, because it is a constantly evolving situation.
Yeah, looks like we're getting a 345
dump. Yeah, so I'd say I think we get a new low of the day before the close. I kind of feel like we crack 409.50, might flush it to 409 in that area. But we'll see. We got 15 minutes to go here. And we'll see if I'm right. We'll see if we get that new low. But I think that 407 level, I think it breaks next week. All it's going to take, give me one more major Fortune 500 company to revise their guidance lower for the rest of the year. Give me one more. You got Jamie Dimon with some comments. You got Elon Musk with some comments. Microsoft changed their guidance. You had the whole Snap issue with their guidance. Give me another company like a Microsoft, or give me another company like a Tesla. Whether it's Elon Musk or not, it's still Tesla saying that they're going to cut 10% of their workforce because he has a super bad feeling about the economy. I mean, maybe could have thought of a better adjective than super bad, but coming from the one of the brightest minds this world has ever seen, super bad. It's like, okay. I got a super bad tummy ache. It's like, what? But
I think that's what gives us the next like 4% down day. First it was Target, Walmart. It's when Apple really cracked, when Microsoft really cracked, when Amazon cracked, Facebook. That's when you'll really start to see some fear in the marketplace, and I think bears take the window at that point.
It's also interesting too. I don't know if you guys noticed, but Tesla and Apple both have death crosses right now. They finally formed on the chart. Now we just need that selling pressure for them to activate.
Oh yeah,
tough market.
Wow, yeah. Yeah, it's the first time you've seen that in a while.
Right. Those are the two strong ones that were holding against that.
I saw someone said, do I think Tesla cracks 400? Oh, man. I don't think so, Andrew. I don't think so. I pray to God it does because I'll be buying it if it cracks 400. I can promise. Oh, 700. It was a typo. He goes, no, 700. It was a typo. I was like 400. I was like, Andrew, damn, man, you got really super bad, and you're like, that's like 400
bad. 400 is like a pre-split price of like 1,700.
Yeah, man, I'd be.
I wouldn't be honestly. I wouldn't be surprised if Tesla eventually cracks under 400.
I would be surprised.
I would. I think that there's a lot of increased competition. When the Fords, GMs get their EV act together, then
Yeah.
You don't think they're more than a car company? You don't think they're a tech company too?
I mean,
we talked about this the other day.
They have.
They're a cult.
Yes,
it's a cult.
I hear it. I hear it and everything about like the competition and everything. But you guys have to realize that Tesla, I think, has sold 78% of every electric vehicle that's on the road. And I think like the company that's second is like Hyundai at 9%.
Yeah.
So they have such a head start on everybody else that as the electric vehicle industry grows, that's how I feel these other competitors will gain market share, but they're not going to be taking market share away from Tesla. They're going to be getting, because the pie of electric vehicles is just going to exponentially get bigger over time. The pie of electric vehicles is not going to get small. Where like there's like this fight for like, okay, like if Ford goes from 4% market share to 10, well, that means they took 6% from Tesla. Yeah, Tesla's percentage of market share might go down, but the pie is getting bigger. So like you can have Tesla go from like 78% to 70%, but sell more cars at 70% than they did at 78 because the industry is getting bigger and more cars are going to be hitting the road. I would be surprised if Tesla cracked 400 and I saw a 3 handle on Tesla, I'd be very surprised. I feel like things would have to go very, very wrong with the overall economy in order for Tesla to get to crack 400. But I'll tell you now, if it does, I'm buying it. So we'll end the conversation on that note. If it does, I'm sure we'll say the same thing. I'm sure he's back in the truck.
Yeah, I'm buying it. I'm buying it. I'll buy it just because it's a cult stock.
Yeah. Yeah.
Dog's barking.
Wow, 121 oil. We might hit 125 here before. What do you think that's going to do to the market here, Mr. Edward? Or we get up towards 130? We called this last week. We said it would be at 125 once China opened.
I hope it doesn't, because here's a fun fact. You have never in history had the price of oil double in 1 year and not had a recession. It's never happened before. Every time the price of oil has doubled in 1 year, you've had a recession. You'd have to go to like 140, and that would be like the guaranteed, okay, we doubled in a 12-month period. You doubled in like a 12-month period, you know? So if there's still something that, you know, I don't know. I don't want oil to go to 130, 140 because I don't feel like paying $150 to fill up my gas tank. So I don't feel like paying $150 to fill up my gas tank. I don't want it to happen, but I'm bullish. Listen, you guys know that I'm bullish on oil. You know I'm bullish on oil. You know, I've been bullish all year. I was bullish last year. Last year in 2021, energy was my number one sector pick for the year. It turned out to be the highest gaining sector in the S&P last year. I think it was 48%, something like that. And then it was also my number one sector pick this year. On January 2nd, I released a report naming energy as my number one sector pick. I gave a list of a few different stocks that I own and that I like. And those stocks are all absolutely ripping people's faces off. They're some of the biggest gainers in the entire market this year. Chevron, Exxon. I'll just pull them up. I'll just show you guys the charts. You take a look at Chevron. Okay, you know, Chevron was one of my picks. Exxon was another one of my picks. ConocoPhillips, another.
Remember when we were buying?
Was it AAP one? Was one at AP? What was?
No, not AAD. No. Devon Energy was one. Pioneer Resources was another. And then these next two are ones that I gave you guys for 2021, which we still own. And that was Occidental, OXY. Guys, we bought Occidental at like $12.60.
$12.
$12.
I
like
bought
really like $12.50, something like that.
I bought Exxon from 40 down to 33. And Chevron at like 76, like 85 to like 76 or something like that.
Yeah, man. I'll show you actually right here is where we bought. Right there is where I bought OXY. I'll just draw that. I'll make that little square for you guys so you guys can see. See that little square right there? That's where I bought OXY. Look where it is now. Another one that I gave people, and that was back then. And I also gave people OKE. OKE was another one. That was like, I don't know. I forgot the price. That was like 26, 27, somewhere in that range.
Yeah, I remember that. I remember that one.
Yeah.
That's the one I was talking about. APP was OKE. That's the one I was thinking.
I remember like the thing, like Oxy was like, we were like, hey, it's a little risky. They could go under.
Yeah, it was. It was the riskiest of all.
Yeah, oil went negative. And like Chevron was the safe one, and it had the best dividend.
Yes.
Yeah.
Well, no, it doesn't have the best dividend, but it's got the best balance sheet by far. So like Chevron, Exxon are like about 4% dividend. OKE was like 9. You know, Occidental was like 10, but then they cut their dividend in 2020. And then you got Devon Energy, Pioneer. They pay variable dividends, so you're going to be looking at probably anywhere from 8 to 10% yield this year, on top of a 50% gain in share price. These stocks have just been unbelievable investments for us in True Trading Group. And a big shout out, big congratulations to my TTG fam. Everyone that got in on those energy names, whether it was last year or if it was this year. But I don't think oil goes to like 160 or anything like that. But even when oil tops, I don't know where the top is. I don't know. Is the top 125? Is it 135? I don't know where the top is for oil. But even when the top is in, oil is going to stay high for a while. Oil's not going back to $45 a barrel, folks. Even when it tops out, you're going to coast into probably the mid 80s, which is still very high. And that's still areas where oil companies can make a boatload of money at those prices. So even if, you're getting towards the top end of share price appreciation on these oil companies, I do believe you're getting towards the top. But a lot of people said like, oh, well, are you going to sell then? No, because I still have the dividends on these stocks too. So I've already taken profit. We have taken profit off twice this year on the oil positions, but I'm still in them and I like the dividend. So
I sold.
I sold.
I mean, that oil and banks was like the only holdovers from 2020. Like that's like, and a couple of other things like ASML. But I mean, yeah, I took it. And I regret it a little bit, but I got the dividend for a while.
Yeah, I regret it. Do you expect multiple expansion? Oh, sorry. I'll hit that one first. So Adam or Joe, whoever just put that question up, throw that one up right after I answer this question. Do you expect multiple expansion for the energy stocks? Listen, I think that the entire sector can get bigger. The energy sector, you go back 3-4 years, it was 1% of the S&P, which is historically unheard of. Now we're up to about 5% of the S&P, which is still historically less than the historical average. So I think that you can see energy get to 7 or 8% of the S&P. I do. So I still think there's a little more upside there, as I think energy can become a bigger part of the S&P weighting wise. It was always tech, which still is. Probably always will be. Tech will be the biggest sector there because they have the highest market caps, and the S&P is a market cap weighted ETF or index. And I just think that these energy stocks have gotten beaten up so badly, and the global macro environment that I think we're going to have for the next 1 or 2 years is going to be one where you're going to have elevated oil prices, tighter financial conditions. People are going to focus less on growth in a high interest rate environment. They're going to want cash flow now. They're going to want dividends now. And what better sector, if you want cash flow and if you want dividends, than the energy sector? So I still do think that I think that it's going to be like owning Chevron, Exxon. It's going to become like over the last 3, 4, 5 years, it was like you have to own Apple. You have to own Apple. You've got to own Facebook. You've got to own Amazon. Like you have to. Every single hedge fund manager in the world, you had to have those companies in your portfolio. I think over the next 1 or 2 years, like if you still don't, like what kind of money manager are you if you don't own Chevron or Exxon in this environment?
Yeah.
Huh?
And also, I mean, the oil industry's before all of this has been hammered for years.
Yeah, it's crazy. Everyone's like freaking out about some people are talking about these oil companies price gouging or something. Like oil companies don't set the price of oil. The market sets the price of oil. And these companies have been dealing with the tiniest of margins forever. Oil was $40 a barrel for a long time. The companies, it cost them $30 a barrel just to get it out of the ground. They were making this much, and now finally these companies are making some money. It's like,
yeah, to put it in perspective, Exxon was the biggest company in the world for the longest time. Yeah. What was it? It was like top weighting on the Dow, the spot, whatever. and they've gotten smoked for years. So yeah, look, they need to have look, the oil industry needs to eat also, right?
Yeah.
And they're going to eat.
They are. Finally, it's their time in the sun.
Yeah, I mean, and they'll drag it out as long as possible. I mean, and they should. I mean, we've had cheap gas for so long, right?
Yeah.
Anyway, there's the bell.
Yeah, there's the bell, guys. We're closed. You're getting a little bit of a move lower after hours. So we did not get the new low of the day while the market was open, but we closed and we're sitting, 50 cents off the low of the day. So a weak close in the market. Like I said, I'm looking for the 407 level to break next week. That's going to be one of my game plans, guys. I will be live. I will be doing a quick live tomorrow afternoon. Actually, I'm not going to be going live on Sunday night. So I'm just going to want to make sure that you all set your reminders. I'm going to go live tomorrow afternoon around 2 p.m. Eastern. I'll answer a bunch of questions and we're going to go over next week's game plan. So make sure that you guys tune in for that. I will not be doing the Sunday night live stream. I'm actually have my wedding Sunday night. I'm already married. It's just a party because it was postponed like 3 times because of COVID. So I won't be going live Sunday night like we usually do at 8:30 p.m. Eastern to go over kind of the weekly outlook. But instead, I'm going to do one tomorrow afternoon around 2 o'clock. Answer some questions and we're going to go over that weekly outlook. So just throwing that out there so you guys could, set your reminders and tune in tomorrow afternoon. I'll do something with you guys and we'll go over next week's game plan. Okay. So, all right, gentlemen, Will Farino and the Professor Simmons.
Thanks, man.
Yeah, thanks.
Thanks for coming in. And what a crazy weekend! All we have is the Fed meeting coming up, and a lot of volatility. I'm excited about next week.
Yes, sir. All right, later, guys. Have a good weekend. Bye, everybody.
Oh, later, guys. Sorry, guys. I was just looking at, there were some weird prints going off after hours on the SPY, and I was just taking a look at them to see if they were actually real prints or not. The SPY started moving around like crazy there. Those are just some outlier prints, though. Those are just some outlier prints. All right, folks. So yeah, guys, let me go into just a little bit more for those that can't make it tomorrow at 2 p.m. I'm just going to draw a line across for you guys on my chart, okay? And I want you all to have this line drawn on your chart, okay? Just draw that line on your chart. This is a level that we're going to pay very close attention to. I've been talking to you guys about this level all week. We've been talking about this level. That's a level that I think we've got to break for next week. And if we do, I'm in puts, all right? All right, guys. There you have it, guys. All right. All right, gang. So what I'm going to do here now is markets are closed. It's 4 o'clock. All right. Markets are closed, 4 o'clock here. We still got about 1,200 people that are live with us right now on this live stream. I'd like to see who is here with us right now that's not a member of True Trading Group. If you are not a member of TTG, do me a favor and then type the letters TTG in the chat right now. If you are not a member, all right, don't be shy. It might sound silly. You're like, you're just not going to do it, but type the letters TTG. I want to see who we got here that's not a member of the TTG fam, as we've got over 1,200 people that are still live with us on this Friday afternoon. Let's see. We got Nick Lucas. Oh my God, push-ups. We got Paros. Hey guys, just type the letters TTG if you are not members of the TTG fam. Are you still swinging your put? No, Nick, my stop on those triggered when I was earlier in the day when I was driving. So I locked in all my profit on the trade. I don't have anything open right now. So going into the weekend flat, and then next week, I'm going to look to see if there's an opportunity there for puts for us next week. We got the Pleb Trader. We got Fight the Good Fight. We got Antonio Ricardo, Joseph Suarez. Good, guys. So a lot of new faces here that are joining the THD fam. Checking us out here on the live. I like it. Folks, what I will do with you guys right now is share with you the educational part of the live. We are finished up with that. What I'm going to do now is explain to those of you that are here that are not members of the THD fam how you guys can take advantage of some discounts and offers that we have to join the TTG platform itself. All right. All right, guys, you just remember that when you guys are joining the TTG platform, you guys have to understand that you are not just joining a chat room with trade alerts, okay? When you guys are joining the TTG platform, you're getting access to the same level of professional education that I received when I worked at a fund in New York. All right, it's in-depth, it's complex, yet easy to understand and implement quickly. Whether you guys have never traded a stock a day in your lives, or you've been doing this for 10 years and you're going to get an edge, our platform can help you guys reach your goals. All right, I get asked all the time what makes True Trading Group different from other courses, and it's because we're not just courses, we're a platform. Okay, yes, there's courses in our platform, but you're also getting access to, financial premium investing and trading tools from today's top financial tech companies that if you purchase them on your own, you're spending about $4,000 to $5,000 a year. You get access to Benzinga's real-time news feed, TradingView's premium charts, Quote Media's full book level 2, CBOE's option chain and unusual options activity, Polygon's dark pool data, Trade Ideas scanner, ETNA simulator. You get access to all these tools when you guys join the TC platform at no additional cost. It's all included. But if you went to those companies directly, you're spending about $4,000 to $5,000 a year. Okay. These are, whether you join True Trading Group or not, chances are you're going to need and you're going to buy these tools because this is what professional traders are using to make better decisions. If they're using them, then you should learn how to use them too. We're going to teach you how to use them. Not only do you get access to them on the platform at no additional cost, we also teach you guys how to use them, right? That's how we make sure you guys have the best chance of becoming successful. And as if that wasn't enough, you're going to get access to our entire 17 course curriculum. Okay, 300 hours of workshops and webinars that we've recorded that are updated daily, transparent real-time trade alerts that goes over swing trading, day trading, long-term investing, futures, crypto. You get a full trading journal, proprietary scanners and screeners, analyst ratings, and so much more. Okay, don't go and pay for this stuff on your own. We've spent years building relationships with these companies so we can offer their products at no additional charge to you on the TC platform. And then you're joining the TC family, a group of about 9,500 members that are led by our team of professional trading moderators that has over 100 years combined trading experience in stocks, options, crypto futures, day trading, swing trading, but also long-term investing. And we genuinely give a damn whether you succeed or fail. Results matter at True Trading Group, guys. Your results matter at TTG. And we measure results through your own P&L. Your P&L, not anybody else's, not mine, not somebody on social media. We measure your success by your P&L. And the bottom line is that members in True Trading Group are making money and they're becoming better traders. If you don't believe me, just pay attention real quick. My TC members, if you're a member of the TC family and you are still on this live with me, I have a very simple question for you. If you are making money and becoming a better trader because of the TC platform, do me a favor, type the $ in chat right now. All right, guys, type the $ in chat right now if you're making money becoming a better trader. Now, anyone that's not a member, just pay attention to how many people type the $ in chat right here, right now. Because these people are just like you. They found us the same way you did. That's one of these live streams. They had all the same excuses. Small account, full-time job, no experience, lost money before. But yet here they are telling you they're making money, they're having success. How? Ask yourself how. It's amazing what education and access to the right tools can do for your trading. Now listen up, folks, because we've been steadily moving the price of our membership up daily, okay? And you guys are going to have a chance to get a 48% discount on the TG membership here tonight up until Sunday at midnight. Okay, the price is normally $2,212, but the next 30 people that go to ttgoffer.com and use the code TTG121, you will get a 48% discount. It drops the price all the way down to just $11.29 for the entire year. No upsells for courses, no upsells for tools. All that stuff I just mentioned to you, you get included free with your membership. All right. So that's a 48% discount. You're also going to get 2 free small private study group sessions That's your chance to go over and get some individual attention from one of the pro traders, ask questions so we can really speed up your learning curve. All right. And also, we got, we're also going to be doing for the next 30 people, upon completing, okay, our courses and quizzes, we will give you $200 cash back. Yes, I'm dead serious. We'll give you $200 cash back. If you're worried, well, if I spend $11.29, I've only got a little bit of money left in my trading account, no problem. We're going to give you back $200. All you have to do is complete our courses and pass our quizzes. That's it. We will immediately send you back $200. That just brings the cost of your membership to less than $1,000 for the entire year. Okay. That's less than $1,000 now for the entire year. Okay. I would jump on this, guys. Right now, I'd go to ttgoffer.com, enter the coupon code TTG121. You'll get the 48% discount. You'll pay $11.29. Once you go through our courses and quizzes, we'll give you $200 back. Now that means you paid for less than $1,000. And last but not least, I put my money where my mouth is. Every single person that joins True Trading Group, you've got 1 year. I'm telling you now, you've got 1 year to go through all our courses, pass our quizzes, and attend one study group. If you do those three things and fail to make the $11.29, your membership fee, if you fail to make that back at least one time throughout your membership, I will double your money back. I will give you $2,258 in return. We will only do this for the next 30 people or till Sunday at midnight, whichever comes first. If you want the $200 cash back, okay, and I'm not saying you have to do it within 14 days or anything like that. As long as you complete our courses and quizzes, you will get a $200 cash back offer, okay? I'm only doing this for the next 30 people that join True Trading Group or until Sunday at midnight, whichever comes first, okay? And then again, you got the double your money back guarantee to protect you and to hold ourselves accountable. That's how we hold ourselves accountable to you. And we have a refund rate of 2.48% since 2016, which means not only how infrequently we get requested a refund, but also prove to you guys the refund is real. We've never denied anyone of that refund that has requested it after doing those three things and never making back their membership fee. All right. And all those that think that somehow the courses, the exams are like, oh, that's the catch, I'm never going to be able to pass the courses. You're wrong. You guys get the answer key on all the exams and courses. You get to do it on your own time, on your own schedule. I'm not saying you have to do this in 30 days. You have the entire year to go through the courses, the quizzes, and attend the study group. Don't cheat on the quizzes. You have the answer key. Don't cheat. You're only going to cheat yourself. You can take the quizzes as many times as you have to. I recommend you take them more than once. Take them until you get all 100s on every single one. It's all about your education. The more you understand the information, the greater the chance you have of implementing it successfully. You just have to go to ttgoffer.com right now and use the coupon code TTG121. That's it. The next 30 people. As long as when you go to the checkout page, you'll know you're one of the 30 people if you see the $200 cashback offer in the checkout cart. So in the checkout cart, if it says $200 cash back, you're getting one of those 30 spots. All right. So that'll be, again, the 48% discount and then the $200 money back guarantee and the double your money back guarantee. Okay. Get it? Got it? Good. All right. If you have questions about the membership or you're having a hard time signing up for whatever the reason, do not hesitate to send a text message. Do not call. Send a text message. It is a text-only phone number. The number's at the bottom of your screen. Send a text to 201-775-9702. Again, that is 201-775-9702. If you have questions about the membership, fire a text message to that number, and we will help you out, whatever the question is that you guys have. Okay? So there it is, guys. Remember, ttgoffer.com. Again, I'm only doing this for the next 30 people or till Sunday at midnight, whatever comes first. So I'm telling you right now, you actually have a chance to get your membership that you're getting for less than $1,000. Okay. And if you're a member, this is not a customer service number. Do not call for customer service. This is only for those people that are looking to sign up for from the live stream. That's not a customer service number. So if you're a current member, don't text that number. It's not customer service. It's just for the people that are trying to sign up from the live stream. Okay, you guys can contact us on our customer support number, which you guys have on the website. Okay, that's for people that are currently members. Let me show you actually what the platform looks like. I talked a lot about those tools, right? I talked a lot about you're going to get $4,000 to $5,000 worth of tools. Well, now I'm telling you now, you do the courses and quizzes, you're going to be paying less than $1,000 to get access to $4,000 to $5,000 worth of tools, and also be able to trade with myself and the rest of the professional traders at True Trading Group. Everybody welcome Zach. Zach's the first one to jump on this deal. Smart man, Zach. Can't pass up a good deal. He sees one. Zach, 29 spots left. So the next 29 people get a $200 cash back offer once you complete our courses and quizzes. I'm literally incentivizing you to get educated. I'm literally incentivizing you to go through and utilize the platform that you are subscribing to, because I have seen the success that members have had. I have seen the failures that members have had. And there is a glaring difference between the amount of people that are successful and the amount of people that struggle with the amount of people that complete the courses and quizzes and the amount of people that don't. So I'm literally incentivizing you. That's why I have no problem offering you that double your money back guarantee. No problem offering you that, because I see when people go through the courses, the quizzes, they attend study groups, and they put in a little bit of effort, I see that the chances of their success are greatly higher than people that don't. Everybody welcome Brandon. Everybody welcome Brandon. Brandon's the newest member of the group. There's 28 spots left. That double your money back guarantee, it's there to protect you. Chances are you most likely, according to our statistics, since 2016, we've only refunded 2.48% of our user base. So chances are you're not going to need that double your money back guarantee, but it's there to protect you, and it's there to hold ourselves accountable to you. And I can offer you that with a smile on my face, because I see the results that members have. Now, not everybody's going to be successful. I'm not sitting here saying, hey, we have a 100% success rate. That's not possible. Okay. But that double your money back guarantee, it's there in case you need it, but I don't think you're going to. All right. Now, let me show you the tools, right? Let me show you some of this stuff, because when you join the teaching platform, of course, you're going to get the chat room. The chat room is where the mods and I share our screen. We're live on the mic. We're calling out trades in real time. We also send out, we have a mobile app that you can, as long as you can listen to music at work, you can be on the mobile app, listen to the audio analysis, see the screen share, participate in chat, and then get real-time push notifications whenever a moderator enters or exits a trade. That's how people with full-time jobs are able to capitalize and benefit from the TeachG platform even while they're working, right? Most of our members have full-time jobs, and that's how they're able to still benefit from the platform. You're also going to get 2 small private study group sessions. This is your chance to talk to a pro trader at True Trading Group, to ask questions and go over lessons and topics that you are struggling with, so we can speed up your learning curve. You're also going to get Benzinga Pro's real-time news feed. This is a live breaking up to the second news alert service directly inside of chat that gives you news as soon as it crosses the wire. The speed of which you get your news matters. If you went to Benzinga on your own, you're spending about $1,400 a year to have access to this. Don't do that. It's free with your membership to True Trading Group, and you can pay $11.28 right now, $12.29 right now, and get the money back, the $200 cash back, and actually spend less than $1,000, and you still have access to that. You also get TradingView's premium charting software. One of the most commonly used charting softwares, costs a few $100 a year. Yours free as a member of TTG. The Trade Ideas scanner is the industry standard scanner to make sure you're always focused on the best stocks during the day. That's cost a few $100 a year, free with your membership. And then our simulator. Our simulator lets you trade stocks and options with fake money. Please use the simulator if you are not yet a profitable trader. Prove you can make money on the sim. Practice implementing what you're learning in the courses. This would cost you close to $1,000 a year if you went and purchased this on your own. Don't do that. It's free with your membership. You're also going to get our own proprietary scanner that lets you also scan for crypto, for my crypto enthusiasts out there. And you also get dark pool data and unusual options activity. Information that used to only be available to professional traders now is at the fingertips of my TeachD fam. You get a trading journal that tracks your trading, gives you statistics so you can see what you're doing wrong. A social sentiment scanner will go through stock tweets, Reddit, and Twitter and tell you what ticker symbols are being mentioned most on the platform so you can stay ahead of the crowd. And then we have analyst ratings. Unlimited analyst ratings on any company you want. You'll see how many analysts have a buy, sell, or hold rating on the stock you're interested in. That can help you make your trading and investing decisions. All of this is included, guys, when you pay $11.29 and then get the $200 cash back for completing our courses and quizzes. You get all of this. This stuff would cost you literally about $5,000 if you went and purchased it on your own. Every day, the mods publish a watch list with the stocks that we're looking at and how we plan on trading them, so you know where to focus where our attention is being focused. And then you have the courses. The courses are a simplified yet expanded upon version of what I learned that I worked at the fund in New York. There's beginner courses, advanced courses, options, swing trading, trader psychology, crypto, you name it. We've got it. It's all in text and video, whatever is easier for you to learn. There are no upsells for courses, okay? You get every single course when you join an annual membership at your trading group. Then on top of that, we've got a video library that is over 200 hours of extra video content. These are workshops that we've conducted, like how to grow a small account, how to resist FOMO, how to trade while working a full-time job. And then when you're a member, you can actually attend all these workshops live, but we record all of them. So if you can't, you can go back and you can watch them at any time. Folks, it's time you guys invested in something real here, right? It's time you invest in something that can actually help you reach your goals. It's something that's going to give you access to the community, the education, the tools that are needed to give you guys the best chance to become successful. I can't promise you success. I can't guarantee that you guys are going to be successful, but I can guarantee you a chance to develop the skills that are needed to become consistently profitable as long as you're willing to put in a little bit of effort. And I can promise you that if you fail to make the 1129 back at least once during your membership, I'll double your money back. I'll give you $2,258. That's how confident I am in our ability to help you become successful. And the day you join TTG, folks, is the day that our relationship begins. A lot of other platforms, they email you, they call you every single day until you sign up. As soon as you sign up, you never hear from them again. Well, the only time you hear from me is right here on these live streams. Now, as a member of True Trading Group, you can talk to me inside of the chat room. We can do study group sessions. If you're a lifetime member, we can do one-on-one mentor sessions. Okay, there's a lot of other ways for us now to communicate. It's not just myself. It's the 8 other professional traders that are inside True Trading Group, as well as the other successful members of True Trading Group. You're joining a family of about 9,500 active traders that genuinely give a damn whether you succeed or fail, that all share the same goal, to learn, trade, and profit together. You just have to go to ttgoffer.com right now and use the code TTG121 to get that 48% discount, the $200 cash back. Guys, you have to realize, you just go through the courses and quizzes, you're paying less than $1,000 for a membership to True Trading Group. Unheard of value. Okay, so that's it there, folks. If you have questions, don't forget 201-775-9702. If you are still unsure about the membership, we do have a 7-day trial. It's a full 7 trading days. There's no weekends don't count against your trial. So don't wait till Monday. Join the trial now. Go through the courses. There's 3 sample courses in your trial. Go through them over the weekend. Prepare yourself. Get familiar with the tools. Prepare yourself for next week. All right. Remember, guys, Sunday night, I will not be going live. Okay. So instead, tomorrow, 2 p.m. Eastern, right here on this YouTube channel, I'm doing a quick live. We're going to go over, I'm going to answer some questions for you guys, and we'll talk about my game plan and my outlook for next week, what I think the market's going to do, and what's my plan to make money next week. We're going to go over that all tomorrow afternoon at around 2 p.m. Eastern, tomorrow, right here on this live stream. Make sure you guys tune in and join me. All right. Set your reminders now. Thanks for joining me tonight, folks. I hope you guys enjoyed this, the final trading hour of the week. Smash that like button, turn on your notifications. Make sure you guys subscribe to the channel. All right. And then I'll see you guys tomorrow. Okay. Have a great night, everybody. Great trading week. Next week will be even better. All right. Have a great night, everybody. Thanks for joining me. Later, guys.